Ahead and get started. Looks like all of the residents have taken their seats. Could I have a roll call, please?
Thank you and good evening. Councilmember Barbara Spector.
Here.
Councilmember Mariko Sayak.
Here.
Councilmember Marcia Jensen.
Here.
Vice Mayor Steve Leonardis.
Here.
Mayor and Chair Rob Rennie.
Here. Okay, so I'll go ahead and do the pledge. Maybe we'll end up doing it. We definitely will end up doing it twice tonight. So please join me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Off the double mics. Okay, so does the clerk have any cards for, oh no, we have a consent item first. Would anybody like to pull this item from the consent, which is the minutes from our January 18th meeting? Would any member of the public wish to pull? Seeing none coming forward, I'm looking for a motion on the consent calendar. Councilmember Jensen?
Move approval.
Do I have a second?
Second.
Okay, any discussion? Seeing none, all in favor?
Aye.
Aye.
Aye. Any opposed? Looks like it passed unanimously. Okay, so next up is verbal communications. If anybody would like to address us for 3 minutes on items not on the agenda. Seeing nobody coming forward, I will close the verbal communications and go to other business. So we're up to item number 2, and I'll turn it over to staff.
Thank you, Mayor and committee members. Back in November, when we formulated this committee, we also adopted an investment policy. And one of the elements of that policy was, as this committee got up and running, we would start to have regular quarterly meetings for, at a minimum, to review quarterly reports for the assets that are under your purview. With this first meeting, quarterly meeting, we have 2 quarterly reports and fund transfer documents to present to you. The first one is for what's referred to as our California Employers Retirement Benefit Trust, or the CERBT fund. This is the 115 trust that you adopted back in, I believe, 2009 to handle all the Opeb assets for the town. Currently, these assets are in the approximate 14.5 million range, and so we'll do 2 things today. We'll take a look at the performance for the quarter from January 1st to March 31st, and then we'll also take a look at the asset sheet that shows those assets under your purview. CalPERS provides us with a 1-page quarterly report, and for purposes of this committee, there are 2 areas that we should focus on. The first area is just kind of a reaffirmation of the asset allocation mix that these assets are invested in. This is known as the CRBT Strategy 1, and so you can see the composition of asset classes in the top right-hand corner. And so this strategy has roughly a 57% global equity allocation, roughly a 27% fixed income allocation, approximately a 5% Treasury inflation-protected securities, or what we refer to as TIPS allocation, another 8% in real estate investment trust, or REITs, and then about another 3% in commodities. And then another area of interest for committees who review asset allocations are seeing where the investment managers are versus their target. And so the little chart below there where it says target versus actual, you can see that for the quarter, their assets were managed in accordance with their targets, very close approximation to the targets of the strategy. And then lastly, one of the things that we'll look at routinely when we go over quarterly reports is how are they doing versus their benchmark. Each one of your managers has been given a benchmark, which means if all the assets were invested passively with no active management, this should roughly be what the market would produce. And so as you can see, your strategy performs in line with what you would expect from the benchmarks. For the column that says 3 months, you can see their net return was a negative 1.32% on the quarter versus a benchmark of negative 1.41, so a slight improvement on their management versus their benchmark. And then once again, kind of looking fiscal year to date, which is another column that will follow as we go through these every quarter. You can see the benchmark had a rough return of about 6.61%. fiscal year to date, whereas the net return of the strategy you're in 6.83%, so slight overperformance once again year to date. If we turn to the next attachment, attachment 2, this is the market value investment summary that we receive from CalPERS every quarter. And once again, you can see if you look at the first column that shows grand total of about 14.5 million in assets under management currently. You can also see on fiscal year to date, the earnings fiscal year to date, roughly 930,000 with some expenses netted out. That's the gross versus net earnings that we talked about. And that comes to an approximate balance of about 14.5 million fiscal year to date. You can see on the quarter, they actually had a slight investment loss of about 200,000. And then if you look over at the unit summary, these assets are in what's referred to as a pool, similar to our safety pension plan. And so we actually own a percentage of the pool. And this just reflects what those units translate into based on a market value of about $14.5 million. In the future, we'll start to see if CalPERS produces more in the way of a portfolio summary. This is a pretty thin summary. And in the future, it might also be possible maybe annually, like we'll do quarterly reports, but maybe we'll do an annual report, and we might be able to get one of their performance managers on a conference line to just kind of talk about annual returns at the end of the year. Any questions on the first Opeb performance report?
Councilmember Spector.
Thank you, Mr. Mayor. Get some action going here. This is the first quarter through March. Do you know generally how what's been happening since the end of March?
So this allocation, similar to the next one we'll go over, have a fairly high percentage of equities. Equity markets have actually been fairly volatile since the first of the year. Net, they're kind of flat on the year, maybe down slightly depending on what day you open your newspaper, but there has been significant volatility. In addition to that, the next highest asset class that both these allocations have, this one and the PARs, is fixed income. We're in increasing yield environment. Fixed income has an inverse relationship. As yields go up, that's a negative on prices. And so my guess is there's probably been a little bit of a struggle in performance there, which is why you see negative numbers. It's probably a little bit of volatility associated with the equities, and then probably negative returns on fixed income because of increasing yields.
Thank you.
Okay, further questions? Seeing none, I'll open up the verbal communication. Would any member of the public wish to address us on this item? I assume the clerk has no cards. I'll close the public testimony, come back to the council for a motion to accept this or further questions. Councilmember Jensen.
I move that we accept the performance report for the California Employers Retiree Benefit Trust for the period ending March 31, 2018.
Vice Mayor Leonardis?
I'll second the motion.
Any further discussion? Seeing none, I'll call a question. All in favor?
Aye.
Anybody opposed? Seeing none, passes unanimously. Thank you. We'll go on to item number 3.
Thank you, Mayor and committee members. Similar to the previous report, this is now going to be your quarterly report and then also your asset summary for your PARS Section 115 Pension Trust. This is the one that's been established more recently, and this is also the one that when it was established, the determination was made to do what we refer to as dollar cost averaging, which means you try to not expose yourself to a single point of entry in the market. Currently, as you'll notice when we move to the asset summary, this trust has only $300,000 in it. The first dollar cost average payment was made in the middle of March. And so even though we'll look at the performance report, this isn't really endemic of performance for our assets to date because our assets came in very late at the end of the quarter. But I thought it would be good to familiarize ourselves with what a PARS quarterly report looks like. And PARS has told us that in the future, once assets are under management, which they currently are, they will probably either have a representative on the phone or in person to walk through their own quarterly report. So if we move to their quarterly report, the first attachment, similar to the CalPERS report, you can see that they break the different aspects of the portfolio down into different increments. Here they have year to date, which is 3 months, the quarter. They have a 1 year, and then they have an inception to date. You can see for this asset allocation, If you go to the very bottom of the page, it says total managed portfolio. It's a negative 1.19 for the quarter. One of the interesting takeaways here is this asset allocation appears to have performed a little better. Well, if you call a negative number better, but it appears to have performed better than the asset allocation in CalPERS by a small amount. One of my concerns here, and we'll bring it up with PARS, is I don't see a benchmark for the total portfolio. I see benchmarks for the individual asset classes, but usually you should have a benchmark that can be a proxy of what the whole portfolio would look like. And so we'll follow up with them on future quarterly reports to see if they track to a total portfolio benchmark or not. If we move to the next page, similar to the CalPERS report, you can see that they've broken down the asset allocation here. Here you can see that for equity, they have a range of about 65 to 85%, and for this portfolio, they are currently at 72.88% for equity. That's within range, whereas CalPERS had a very specific target with a 2% band on either end. This asset allocation has a pretty wide allocation range, and you can see that they're within that range. If you move to fixed income, similar approach. They have a 10 to 30% range for fixed income. They're currently at 22.19%, so they have a slightly higher allocation to equity than CalPERS allocation, but that means in turn they have a slightly lower allocation to fixed income. And this portfolio also currently has 4.9% in cash with a range of 0 to 20%. If we move to the following page, once again, this is a breakdown of returns. They've now broken it down through the different passive investments they use to replicate their asset allocation for us. And so you see the different types of index returns, whether it's a 1-month return, 3-month return, or year-to-date return. The first page we looked at is the one that actually shows the total return for the portfolio. This is just showing the subcomponents. And then if we move to the PARS asset summary report, as I mentioned, our first dollar cost average investment was placed with PARS, I believe, on March 20th. And you can see that that is currently a contribution of $300,000. During that period, you can see that we lost about $96.45 on that investment period, or that translates into a 1-month loss of 0.19%. Which, considering when we entered the market, and once again, equity volatility, an increasing yield environment, not surprising that they have a slight negative return in that portfolio also. And if there's any questions, I'd be happy to answer them as it relates to the PARS investment report.
Okay, any questions for staff? Seeing none, I'll open the public testimony. Would any member of the public wish to speak to us? I don't think the clerk has any cards. Seeing nobody coming forward, I'll close the public testimony, come back to council for any questions or a motion. Councilmember Jensen?
I move that we accept the quarterly performance report for the Town of Los Gatos IRS Section 115 Pension Trust for the period ending March 31, 2018.
Vice Mayor Leonardis?
Second.
Okay, I have a motion and a second. Any further discussion? Seeing none, I'll call the question. All in favor?
Aye.
Anybody opposed? Seeing none, passes unanimously. And that's the end of our agenda, it looks like. Anything else?
Just comments for future agenda. At the next quarterly, we'll go over performance reports again, but we also think we'll have final actuarial valuations for both the pension plan and the Opeb plan. And so that will be an annual exercise we'll do. We'll review the actuarial valuations for both of our plans. In addition, there had been previous questions regarding insurance that happened at your fiduciary training. Council, I believe, has done some preliminary research, and we'll be bringing the results of that research to the Finance Committee, because the question was also posed there and then back here, but it appears as if we are going to have to procure additional insurance for our council members on this committee.
Councilmember Spector.
On what committee? On
This committee, we're going to procure some form of fiduciary insurance for the council members on this committee.
And then, so the follow-up question is, what about the members of our Finance Committee?
That's what I was going to ask.
I'll let the town attorney speak to that, but his preliminary assessment is?
I've done some preliminary research and reached out to ABAG, and preliminary is it's not covered under our current ABAG plan. And so I reached out to Alante, which is our coverage for property insurance and other things other than through our pool insurance, which is ABAG. and they'll get back to me real soon on what those costs would be, and then we'll bring that forward to you for approval. I think it'll be in the neighborhood of between 10 and 20,000 per year is what the cost would be to have that insurance. And of course, I think staff will be recommending that we do obtain that extra policy just to be sure that you're covered for any errors and omissions.
And then there was an additional question about the public members on the Finance Committee.
No, they're just an advisory body. They don't have any final decision-making whatsoever, so there wouldn't be any liability from them, and we'd be able to cover them if there was any action, but they don't make final decisions. I've never seen any suit involving an advisory body, but I can check on that further, but my first inclination of that is there's no liability there whatsoever since they don't have any final decision-making authority.
Councilmember Spector.
Thank you, and I would suggest that we do have that answer for the Finance Committee, because at least one member of the three what I would characterize as very concerned.
Okay. And it, you know, as I go through my research too, I'll flesh that out with Alante to see what that coverage would be, even to cover them at the outside chance there could be held liable for any reason whatsoever.
Okay, any further questions or comments about future agenda? Okay, seeing none, we will close this meeting.